Our next guest says a steady stream of bad news could send it close to 62 cents against the U.S. dollar later this year. Joining us is Adam Button. He's a currency analyst at Forex Live, and he joins us from Montreal. Adam, it's good to have you here. First of all, your view on the Bank of Canada. We've spoken to one guest already who believes the Bank of Canada next week will cut rates by a further 25 basis points. Do you agree?
Good morning, Paul. I think the Bank of Canada might surprise this week, but it's not the base case scenario at this point. The Bank of Canada over and over again, and Stephen Pawlowes has shown that he's an optimist, and he'll go in and be optimistic for days and weeks and months leading up to the decision and anticipating good economic news. And then when it doesn't come, he surprises the market by cutting. I think he wants to maintain that element of surprise, but I don't think we're quite there yet in terms of a Bank of Canada cut.
Your call on the dollar is 62 cents U.S. How long will it take us to get there?
It's been a surprise how quickly the Canadian dollar has fallen over the past year. If we go back a year ago, we were at much higher levels than we are now. It's fallen very steeply, very quickly. It's maybe gone at the moment a little bit too far, too fast. So I think it's going to take somewhere towards the middle of the year to get there.
You, in a recent note, you outlined two major themes that you think are at work here, and you note, and I think you note correctly, that not a lot has changed in the news flow thus far during 2016. The two big themes you see are the end of the commodity supercycle, the ongoing collapse of commodity prices, and the interconnectedness of world markets, despite the fact that markets tend to focus too much on the U.S. economy. Why don't we take that second subject first? Your thoughts on markets paying too much attention to good news in the United States?
Right. It's a U.S.-centric sort of market view, your competitors in the United States will go on and on about the Fed and how important it is. And then the second thing they'll look at is China. Well, if we add up commodity producers, we have a China itself, Canada, Australia, Mexico, Indonesia, South Africa. Some of the other large ones, the economies the GDP, combined GDP, is equal to something like China. Add in a few more with Latin America, the Middle East, and it's equal to the United States. And in these places, we tend to divide the world into developed markets and emerging markets, but we really need to look at it as commodity exporters and commodity importers right now. And commodity exporters as a group are crashing in Canada, Australia, all these places are struggling. And the focus on the United States or China, I think, misses the point that this is where the economic malaise, economic weakness is coming from. And then on the second point, I don't think the models at central banks and even in markets recognize how tied in these economies are to one another. It's not necessarily Canada just flowing into the United States, but all of these factors together, earnings, and on and on. It's a surprise how quickly it's come this year, but if you look at the global picture, it's seeing Brazil as weak as it is. That flows back into the rest of the global economy.
The other major theme you see is very weak commodity markets. How long will they continue? Is there any positive, is there a light at the end of the tunnel, so to speak, in the ongoing collapse of commodity prices?
Right. It's something that's really been missed. It's a commodity super cycle. It's 15 years of steady commodity gains to levels that 15 years ago we thought would have been impossible. And a super cycle deserves a super bust, and that's what's happening. And it's not that it will drop and bounce back. It will drop and skid along the bottom for many years, 3 to 5 years. And I don't believe there are many oil companies, small oil companies, that can survive that sort of environment where they can't raise money, especially with the Fed hiking rates, interest rates going up. So we'll start to see defaults, and I think that's what we're getting towards. Yesterday, it was Moody's came out with a note. We had very little traction. They were talking about higher defaults, up to 4.5% for high yield. JP Morgan, like you mentioned earlier, is talking about more stress in the energy sector. It's going to be difficult for these companies to refinance. Canadian oil now is trading around $15 a barrel. That's a very, very difficult environment to make money in.
Let's talk about the effects within the Canadian economy of the very rapid deterioration of the Canadian dollar. We're hearing now regularly about the higher prices that Canadian consumers will pay for imported fruits and vegetables, for instance. They're going to pay a lot more for a lot of imported products. What's that going to do to the Canadian economy? It's difficult to imagine at this juncture an uptick in inflation, given all the weakness we're seeing in other elements of the Canadian economy. What will shocks like that do to the Canadian economy?
Yeah, it's funny to see how much more quickly the prices rise than when they were falling because of the strong Canadian dollar and how sticky they were then. It's coming. Consumers will feel it. It's a confluence of shocks. There'll be employment shocks in Western Canada, pass-through shocks into Central Canada and Eastern Canada because of the banking system feeling some strains, and on and on. Maybe you have some good news in tourism, but it's not nearly enough to offset the malaise. What Canada needs to do is take some action. I think we're seeing the government start to lay the groundwork for that. There was a bit of a press offensive yesterday talking about infrastructure spending, backing away from deficit promises or small deficit promises. And that could be good news. That there may be some recognition there and at the Bank of Canada that something needs to be done quickly, because it does. This is no time to worry about deficits. But at this point, it's probably too late. The pain has come on so strong. And by the time a sort of recession hits, it's already too late. So that's the Bank of Canada's challenge this week. And credit to them if they step up and take some action now.
Adam, good to talk to you. Thank you very much. Adam Button is a currency analyst at Forex Live, and he joined us from Montreal.